We are seeing insane property tax increases, and some of these people are now turning to selling. There are ways to significantly reduce your property taxes that some of the people selling these houses apparently didn't know about. And if you stay tuned, I'll go through how to do that. This is R.E. Watchman. Go ahead and like, subscribe, share. Thank you for watching. One of the unintended consequences of all the artificial factors over the last few years that pumped up home values is that now the tax man is coming to collect his money. As we see these home prices skyrocket, it takes the government a few years to catch up, but now they're coming and they're wanting taxes proportional to those new home values. This is going to be most pronounced in places that have no state income tax, such as Florida, Texas, because they rely on property taxes and sales taxes for their tax base. And so you'll pay higher property tax percentages often in these places. And so as we have higher home appraisals, that leads to higher tax bills. And interestingly, places like Texas and Florida are experiencing huge increases in housing supply available for sale. Now, the people who are going to be most affected by this are people who bought in late 2022 and later. The reason for this is they still paid the high property values for their homes, but they also are paying a much higher interest rate on their home because they missed the lower rates. And now they're also going to be paying a huge property tax increase. So whereas people who bought, years ago, they would have experienced some of the benefit of that appreciation in home values. If you bought recently, like in my market, we haven't even really had appreciation in the last 2 years. And in fact, are starting to see price deflation. So you have people who potentially bought at the top of their budget. They saw a huge increase in taxes. And then they also now, they're paying a high interest rate, the high property tax value. The other thing is the higher the value is of the home, the higher the insurance carrying cost is. Looking at homes on Zillow, you can see what they paid last year in taxes, but guess what? That's not what you will pay necessarily in taxes. And really the goal of this channel is that I believe people make decisions, huge decisions in their life, without fully understanding the numbers. And really the people that are presenting the numbers to them are people who are financially incentivized to sell them the bigger home. Here's a home listed for sale by an individual. It's listed at $405. They had dropped the price from $425 because it wasn't selling there. They originally paid $385 in 2022, but they bought this home. The taxes were $4,600 and then went up to $9,500. So a 100% increase in property taxes. When you're out looking for a home on Zillow, you can look at what the prior year's property taxes were, and people probably do that. However, you look at cases like this, albeit an extreme case, and you can see that often what the person paid last year has nothing to do with what you'll pay this year. And the reason for this is homestead exemptions. We'll get into what those are, how to file them towards the end. But in places like where I am, you get money off your property taxes, and it caps the amount that your property taxes can go up by each year. However, that cap applies to you. So whereas the last owner of this house probably had the benefit of caps on their increases in property taxes, once you sell, your appraised value is going to be highly considering what you paid. So there are ways to protest your property taxes and prove that, hey, my home is not really worth this much. You shouldn't tax me this much. The problem is if that's how much you paid, you don't really have much of a leg to stand on because the home is probably worth what you paid for it. So this person went from buying a home, it really hasn't appreciated that much based on when they bought it. Now the taxes have skyrocketed. I mean, you talk about, $5,000 increase in taxes. I mean, that's like $600 a month. And on a home in this price range, we're not talking about some $1 million home where that would be a small percentage of their overall payment. At the time they bought this home, they could have had a pretty low mortgage payment. I mean, if you're talking maybe $2,000 and then you go up to $2,500, it's a pretty significant increase. And so that's an example of where, hey, if you buy a home and you live within your means and you buy something that you can afford, well, you can experience increases like that and be okay. However, a lot of people buy at the top of their budget and then they have this huge tax increase and they're unable to absorb it. But here's the thing. This is listed as an owner occupant. So what they should have done is gone and filed a homestead exemption, which wouldn't have affected the fact that now you're paying the tax amount based on your sale, not what the last guy was capped at. But it does reduce your tax bill. So while they still would have experienced a tax increase, they could have reduced their tax bill by a few $1,000s by this homestead exemption. Now that's assuming you live there and you're an owner occupant. Looking at this house, it's listed at $369,000. Now Texas is a non-disclosure state, so all we can really see is what it was listed at the time that they paid it. But they, paid probably around $350,000 in late 2021. So right now they're selling and probably won't really make much of a profit, hardly even break even because of the realtor fees involved, closing costs. And this was purchased by a company. Well, they bought it, they tried to rent it, they couldn't rent it for what they thought they would get, and now here we are several years later where their costs are going up from the property taxes. You'll see a property tax increase of about $2,000. So not only were they not able to get the revenue that they thought, their costs were higher than they thought. So it will be interesting to see how many of these investors, their calculations just didn't bear out, and especially because of property taxes, and also from what we saw in my other video about the institutional Wall Street investors selling. In a lot of cases, they just weren't able to get more for rent. The properties sat, there's all these specials people are trying to run right now. They're just seeing that I believe consumers have reached a breaking point, aren't able to continue to pay higher and higher prices. So for those big Wall Street investors, they also realize now you can get 5% in short-term treasuries. So if they get less than that in the cap rate for a rental property, why are they keeping it? You also have talk of changes to capital gains taxes. If capital gains taxes are going to go up, that means you sell that home and you're not an owner occupant, you're going to pay capital gains. So I think we might see selling from that. Let me get out while I can before the potential taxes on selling go up. The example I will give is for San Antonio, but you can follow similar steps wherever you are. But the deadline for most of these homestead applications is going to be coming up. Here it's the end of April, so you want to go ahead and do it now. However, it does say here that it can be retroactive. So even if you missed it for past years, you can go ahead and file it now. This is just the time that they're taking the applications. Now, you do have to live in the home. That's an important thing to say. So this does not apply for investors. And I think that's how Texas is going to sort out some of these problems we have where we have investors come in and bid up home prices and buy up a lot of these homes, is that I think they're going to continue to offer incentives and property tax breaks for individuals who live there, which then keeps their taxes the same and they're able to raise them on the investors. And that might be why American Homes for Rent sold 638 homes in Texas in 2023 and bought 0 after years of buying and not selling. If you go to this, just search your county homestead exemption, and you'll see it'll take you right to it. So on this application, they're going to ask you for pretty general information, but you'll notice that there are several categories. So if you just live in your home, you're going to get 1 break on your property taxes. But if you're over 65, if you're a disabled veteran, there's several other categories where you can get even deeper property tax decreases because of those categories, because you fit one of these populations that they're trying to help out with this homestead exemption. You'll see that they take these applications between January 1st and April 30th. So you can file it for past years. It's just that this is the part of the year where they're processing them. So if you want to do that, you can do it for past years. But if you want to do it for this year, you need to act by April 30th. You can only go back 2 years though here. It may vary where you are, but that's how it is here. Now I'm going to be honest with you. I work in analytics. I've been an analyst in the past. I don't mind getting down in the weeds and details and numbers, but some of these breakdowns of how these taxes are calculated is complicated. So I'm going to include here a little calculator in Google Sheets in the show notes where you can plug in. There will be things that vary depending on where you live within San Antonio, but you can use this calculator to approximate what your taxes will be. Now, again, I'm not a financial advisor. This is not information that you should be using as anything other than me being a consumer and trying to give you tips as another consumer that you may not know about. So if we look at an example of someone who has this homestead exemption, you can see here you've got the market value, which is what the county thinks the home is worth. You have the appraised value, and then you have a cap. So they will deduct a certain amount saying, hey, we're not going to raise what we think your home is worth unless somebody new buys it. We're not going to raise that so that we're not raising property taxes on people at huge percentages per year. You subtract the cap from the appraised value and you get the assessed value. But then you have these categories where they say, hey, we'll give you this many $1,000s of a break on this category. And so then you get the taxable value. So they say, this is what we think it's worth. This is what it's worth based on the caps. You go from the assessed value to the taxable value. So they got these percentages, and the taxable value reflects how much did they give you a break on each of these categories here. And then you multiply it by the percentages. Again, I'll have this link to this Google Sheets down here where you can try to do these calculations yourself. But at the bottom, you'll see here's what the taxes would have been, but here's what they actually are. And what they would have been is really what the investor will pay. So if you're an individual trying to invest especially, you need to know that, because, hey, if you go buy a property thinking the taxes are going to be what the guy living in it paid, that's not the case. You're going to lose all those exemptions and you're going to be paying far more taxes than what you thought. And I think we'll see investors who aren't very savvy and don't know things like this selling because they're saying, oh, now I'm getting crushed by taxes. And I didn't expect that when I ran my numbers for what this property would be worth. So the other thing you can do, if you've lived there for a while and your taxes have gone up, is you can protest the appraised value. And so what that means is the government says, here's how much we think your home is worth, and we're going to tax you on that. If you're able to go to them and say, no, it's really not worth that much because you've been living there for a while, and maybe there's some reason it's not worth that much. Maybe somebody sold a house nearby that was for a much higher price than what yours is probably worth. And so that is going to affect their calculations. But you could say, hey, look, my house is very different than this. This was a brand new house over here. It's much nicer, much newer, more updated. My house is not like that. Or maybe there were larger homes than yours in your neighborhood sold, and that drove up what the government thinks your home is worth, when in actuality, it's not worth that much. You can go and protest what you think your assessed or appraised value should be, but you're going to need some evidence. However, I think it's one of those things, it's kind of like when the cable company raises your bill, right? They know a certain amount of people are just going to pay it. But if you call them, you can get the special rate like every year if you call them. They're kind of banking on the fact that a certain percentage of people are just not going to look into it and not do anything. They'll charge those people more. The people who look into it, they'll give you a better deal. So again, this is San Antonio, but it's the same idea where you are. Just search for your county, search for protest property tax values. You'll see here you get an ad at the top for some company who will do this. But the thing is, maybe they can do a good job. I don't know. But my guess is that based on the process from what I've read, it doesn't seem like it's something that you really need a professional to do. I mean, I've heard stories of people going and like they hardly even look at your information and they say, okay. So I don't know that I would hire this company. I would go straight to the county tax page, click on that, and they'll give you all the details on what you need to do. So here, they'll have an initial meeting. It'll be like a 15-minute phone call or Zoom. You can present whatever evidence you think you have, and they'll probably make a decision then. If they don't agree with you that they should lower your tax bill, there is a second process where you have to go and have sort of a more formal meeting. But my understanding is a lot of people don't even get to that step. Again, it's like the cable company. Hey, lower my bill. Okay. But the people that didn't call, they don't get the benefit. This one's probably an extreme example. And I think this one's based on it being in a good location. It's a really small house and there's probably nicer, larger houses around it. And it's a really great location. But you can see they're selling this house now a couple years later for not much more than what they paid. So I don't think it's a flip. It just really wouldn't make sense for them to flip it for this little of an increase. But they bought the house, they're turning around trying to sell it, and you look, the taxes went from like $2,400 to $7,200 per year. So you're talking about a 3x increase in property taxes. This one may be an example of where they could probably protest that, hey, my neighbors have much nicer houses than me. I don't need to be paying this much in property taxes. But just think about what calculation could you have ever done, whether it's living in a house or investing in a house, where you would have a 3x increase in property taxes, thousands of dollars a year, $5,000 a year more in property taxes, and still the numbers work. The best thing you can do to prove to the government that you shouldn't be taxed that much is show them examples about your home and other similar homes in details. So they're going to pull 3 comps more than likely, comparable homes. And the thing is, if you live in a neighborhood where there's a big variety of types of homes, they may be pulling the nicer ones in your neighborhood and ignoring the cheaper ones. So what you could do is either show them the cheaper homes in your neighborhood that are more similar to yours. You could show them the nicer home in your neighborhood that's worth more and show them differences. Maybe show them some pictures of the inside of your home compared to the inside of their home. If they've totally gutted and remodeled it and flipped it, well, then you shouldn't really be compared to theirs in terms of, the value. And one way you can do this is Propwire. This is a free website. I kind of hate this website because they give information to those people who call you and ask you, can I buy your home? I get those calls all the time for the property I still own, and it drives me nuts. But they do provide a lot of data. I think it depends where you are, how good the data is. But in my market, the data is pretty darn good. So if you go to propwire.com, search for this property. You can pull it up. There's a tab that says comps or comparables, and you can see homes around that area and what they sold for. And you can see in this example, it's a huge variety. So there's probably some really fancy homes in this neighborhood, but it's an older neighborhood. So some of the homes are old, probably haven't been updated. And so what you want to do is try to find ones that prove a value that's lower than what the government currently thinks your house is worth. And again, there's nothing like shady about this. This is just saying, hey, the government's doing the government's kind of like, it's almost like Zillow in a way. I mean, Zillow has values of what they think stuff is worth. But there's no guy from Zillow going to every single house and noting the differences. A lot of it's computer and formula driven. So they're doing the best they can to come up with a value, but they get it wrong sometimes. And that's why I think you see sometimes these investors buy stuff and then it doesn't rent for what they think it will. And then it's just, or open door, they buy houses thinking they'll make a profit on them. They don't make that profit. It's really hard to have a formula that's always right. There's always exceptions. So really, there's nothing here you're doing that's nefarious or shady. All you're trying to do is say, hey, look, you think my home is worth this. I know you didn't walk around to every single home and go inside them and look at every single feature in every single home. You're using data. You're doing the best you can. But here's what you got wrong. Here's why you think my home is worth more than it really actually is, realistically. And if you're able to prove that, and again, I really don't think they need that much evidence. I mean, think about government workers. Have you been to the DMV, or have you had to deal with government people? A lot of people that work for the government, I don't want to overgeneralize, but some of these people are not super fired up about their jobs. I don't know that they want to fight you about, no, your house really is smaller than the other one in this neighborhood, or your house really is less updated than the other one in this neighborhood. I think at the end of the day, they just want to do their job. So, you may have this 15-minute meeting and get what you think and then be good to go. You may have this 15-minute meeting and they say, okay, and lower your taxes. And it was a very small investment of your time. But think about it, if you do that right now, right? Let's say you stay in this home for years and years and years, and you've lowered what the government thinks it's worth right now. Well, because of those caps, they're also, not only are you lowering your bill for now, not only are you lowering it for the future, but you're also lowering it, and then there's caps on the increases. So you're potentially saving yourself thousands and thousands of dollars over many, many years by a short little meeting with some guy at the appraiser's office. So again, this is for people who've lived in your home for a while. If you bought your home recently, someone had previously lived in it for 20 years and their value had been capped. The increase of their property taxes has been capped for all those years. They were paying much less tax. Now you move in and pay a much higher price and you say, hey, it's not really worth that much. They're going to say, well, what did you pay for it? So you're really not going to be able to lower it in that case. That's an example of the whole reason I go through these calculations is you want to know that as a home buyer going in, because at that point it's too late. If you pay that amount for that home, you're not going to be able to go and say, oh, it's not really worth that, because you paid that amount. So again, this is also kind of me doing a little bit of a sigh of relief because, I would have bought a home in late 2022. That's when I relocated. And I just thought at the time, man, we're going from rates of like 3 to 6 in a short period of time. 6 is not a bad rate, but it's just the rate of change, right? And so, again, 6 is not a bad rate, but it's like when things change really fast in housing, it takes a while for equilibrium to happen, right? We're just now seeing the prices softening from these rates. It's taken a long time. But it was only a short time that the property values skyrocketed and these taxes skyrocketed. And so that also will be interesting to see, how does that affect the market? Again, I think companies are going to say, oh, wait, my profit calculations on renting these homes out isn't working anymore because of these taxes. They may sell. Some people are going to say, hey, I bought this house thinking I'd be paying $3,000 a year in taxes. Now I'm paying $7,000 a year in taxes. My financial situation, I was already buying the most expensive house I could afford. I can't do this. So I think you're going to see people selling from that. And we're already seeing a ton of inventory in San Antonio, much more than we're even seeing inventories at above 2019 levels in San Antonio. And again, the prices inflated the way that they did because inventories were artificially super low during those super low interest rates. So now that we're starting to see people sell, it'll be interesting to see, does this lead to lower property sale prices? If more people are getting out, more people are selling their home because of these tax increases, what does that mean for you? Here's the interesting thing. Here's the play as a buyer. If someone's house skyrocketed in tax value and you're able to get a house for lower than what the government thinks the house is worth and what this person's paying, you might actually be able to buy a house now and see lower taxes than what the last guy bought. It just all depends on these calculations. It all depends on what you do. So again, I am not a financial advisor. I'm a consumer. I'm someone who would be wanting to buy a home, but I look at the numbers and they don't make sense to me. And I have no agenda as far as I don't make any money. I'm not selling mortgages. I'm not selling homes. I'm not a realtor. So I don't really get any benefit from people buying homes. So I don't have any incentive except for to tell you, here's my experience as a home buyer, but a savvy one who does like numbers and does love to get into data and help you to start thinking this way if you are a home buyer, and start to think, maybe I need to look into this for myself and see if some of what Ari Watchman's talking about applies to my situation. So this is Ari Watchman. If you got value out of this, please like, subscribe, share. Hey, if you go and file a homestead exemption based on this because you didn't know about it and you save thousands of dollars a year, please, especially thank me in whichever way that you can. This is Ari Watchman. Please leave me a comment. Would love to connect with you and see what you're seeing in your market. Sound the